Good evening, everyone. And first and foremost, I want to say thank you to Sue and Whitney for giving us this opportunity to come and talk to all of you about a very important subject. I also want to thank somebody who's with me tonight, Nathaniel Knowlton. He is from our Bexley branch here, and he'll be joining me from time to time to add, I think, a very real commentary on what's going on day to day, because he works in our retail branch operations, and those are the true heroes when it comes to financial wellness. What we want to have tonight is basically a conversation around what's happening in our world right now when it comes to managing our finances in very uncertain times and very uncertain markets. So I think we would all say that the world has changed for everyone. And first and foremost, Sue said that you're going to be doing something around comedians or comedy or something. Anyway, I thought I heard the word comics. Is it just comics, the physical comics?
Yeah.
Because you see, I'm playing with them. This is an audience participation environment, and I don't know if Whitney, will you be looking for questions online? So for those of us who are joining us online, please do not hesitate to stop and say, could you ask this gentleman this question? I'd be happy to answer that for you. But I am, in all times, I am a comedian looking for an audience because what I found when I started this journey around financial wellness and what it means and financial freedom is that you have to laugh at yourself first and foremost, then you have to laugh a little bit at the situation you find yourself in. Because for many of us, this started probably around 2008, 2009, and what was a critical meltdown at that time. And we had to look at our finances in a very different way. We had to think about how long was it going to be before we could retire. And I estimated it was going to take another 7 to 8 years for me to retire. And that was beyond what I had originally anticipated, which is a while from now. So when we look at this, the world has changed for everyone. In a time of crisis, there's often a lot of change and uncertainty. And J.D. Power did a survey that showed that 84% of consumers were somewhat very stressed about their current financial situation. And usually I'll take this ball right here when I'm doing presentations, and I do this around our community. My background is very different. I work for a bank, but I don't have that traditional banking background. I came from a place of data analytics for the banking industry. What differentiates people? And what I found is that when I ask people, what's the greatest stressor in your lives? Invariably, somebody's going to say the word finances, right? And that's when this flies out at somebody, because everybody needs a stress ball in their life when they're thinking about finances, right? So when they did this study and they said 84% of consumers, I had to say, nay. I think it's probably in the 90th plus percentile of consumers, when they're really thinking about it, are stressed at some level about their financial situation. And when you take into consideration what we've been through in the last 2 years, I think everyone at some level is stressed about finances, what's going on, what's going to happen. Currently in this situation, we've come out of COVID, and we're thrilled to be here live talking to you, right? We're also thrilled to have people online. What has COVID been able to teach us is that we can communicate with lots and lots of different ways. We can be live, we can be, on a YouTube, or we can be on a Zoom call. My wife is an educator. She is my absolute hero because she had to learn all this in a split second so that she could communicate with with her kids. And so we now have the ability to share information readily and freely. All right. So, affecting their spending behavior and decisions they make about their finances. That's the next line that I like to pick up on.
Get started if you want to hear it.
When we started talking about financial wellness in our community, when we started talking about financial wellness in employer settings with employees, What we're really talking about is looking at our behaviors with money, right? How do we relate to money? How do we view money? What are our behaviors around spending? There's this device that came about in 2010, really started to come online, and I'm going to pull it out right now. Oh, and everybody knows what it is immediately, right? This amazing computer enables us to manage our finances anywhere in the world at any time. But it also does something else. We can spend money we don't have just by clicking a button. Do we know what we're spending our money on? Do we even have a budget? So one of the things we're going to talk about setting budgets. We're going to talk about saving more money. What does that really mean? How do we do that? And most importantly, probably managing our debt, right? So when we talk about financial wellness and managing our finances in a crisis, for us, and I want to talk about real world experiences, because when we were in COVID and we started thinking about, inflationary pressure, right now we have increased costs for gas. We have supply chain issues, which are causing all the costs for the goods and services that we consume are going up. And we don't know where that ends. We don't know where this ends. We don't know when it's going to ease up. Right now, we see that gas prices came down a bit, but they're going to go back up probably, because we're getting ready to go into what we call the summer formulation for fuel, which is always an increased cost. So we get a little bit of a breather, probably for all those who are traveling for spring break. But when spring break's over, probably be ready for that summer formulation, and costs for gas will go up. So the first thing that we did was, my wife and I said, we need to set a budget. We've had a budget, we use a budget, but do we really look at that budget and say, how well are we doing with what we spend? Do we know where our money is coming from? Do we know when our money is going out? So when we started looking at this, we kind of said we wanted to identify the sources of our income. We wanted to take charge of our spending habits. We definitely wanted to cover our necessities. But what is a necessity? Is it a want or is it a need? And we're going to talk a little bit about that as we go along, and decide where you want your money to go. As we go through this, and online this is available, and at the end of this, I'm going to show you a link to the KeyBank site, and we have a whole area on there called Financial Wellness. And it has all of these resources. But one of the things, and we have this helpful article, we have a link, and it's about the 50-30-20 budget. Nathan, and I don't want to put you on the spot, but you want to talk about the 50-30-20 budget?
Absolutely. Yeah.
All right, great. See, nobody wants to just hear me talk the entire hour. They want multiple people.
Right, absolutely. So the 50-30-20 budget is something that we review with every client. So we want to make sure exactly what Stuart just said, the wants versus the needs, right? A lot of people, when they come to sit down to a budget, you're already trying to save cash flow. Not too many people have excess cash flow and are like, now I need a budget. So we want to make sure all of our things are in line. So the 50% are those needs: your rent, your groceries, your insurances, your doctor visits, things like that. The 30% and the 20%, I'm a financial minded guy. So I like to say 30% is towards your financial goals. So this can be paying off your debts. This can be saving for retirement. This can be saving for that first big house or the next new car. And then the 20%, I always say, goes towards whatever you want. I think it's Dave Ramsey says it best.
We're saving it, right?
Yeah, right.
Yeah.
Well, yeah. So the 20%, I like to switch it. So I like to switch it and say the 20% is towards whatever you want, and the 30% is towards your financial goals, because we got to be financially minded, right?
Now you see the difference between the guy with the gray hair and the guy with the dark brown hair, right? Go sit down.
I got a few gray.
Right.
Got a few gray.
All right. What Nate is saying is very true. When you start thinking about demographics, when you start thinking about age groups, we each have, that 50, 30, 20 budget has a different connotation. 50%, generally what I need to live, that 30%. And then that 20% for many of us is now pay myself, pay myself, pay myself. One of the things that we talk a lot about when we're out with companies and their employees is we're telling them, pay yourselves first. You pay a mortgage, you pay rent, you pay for gas, you pay for your food. Why would you not pay yourself first? That payment that you pay yourself now, when you're in your 20s, 30s, and 40s, when that grows through that time into your 50s, your 60s, your 70s, can have a very profound impact on what you have when you say, I'm just tired. I want to stop. You might want to have a part-time job, but you want to get out of that day-to-day. That 20% that you put away, and that's what I tell people, you want to work yourself, you want to work up to saving 20% of your income per year for your future. Live your best life now. We should all live our best lives now, but we need to save for the future. We're going to stay on this subject for just a minute because this is where right now we have the greatest impact. What we like to tell people is just write it down. You don't need a fancy computer or computer program to budget. You need 2 columns. What do I have coming in and what do I have going out? And then from there we say, okay, now when does it go out? So one of the things that my wife and I did was when we started doing this budget, and it was all the way back in 2010, because we needed to get rid of debt. We wanted to get rid of unsecured debt. What is unsecured debt? It's that debt that we hold, credit card, department store credit cards, other loans that are not secured by a tangible asset like our home. Our home, when we pay our mortgage, we're paying ourselves every month. We're earning, right? We're earning a foundation for our future. We are paying for that foundation. But when we have unsecured debt, we're paying a lot of interest typically. And I like to be very honest about this. When we came out of 2010 and our world changed so drastically, I realized we had way too much unsecured debt and we had to put it in line. So the first thing we did was we got the budget. This is when the money comes in. Then we looked at when the money was coming out. And what we found was that our money was going out, it was front loaded on the month. In other words, it was going out early, right? And so we were always kind of behind on what we needed to pay. We couldn't wait till the end of the month. We had too much going on. So what we did was we started working with our creditors. And we said, okay, I want to make, we had a car payment. And I said, I want to move that car payment to the 15th of the month. So the next time I get paid, that's the next big one. And then we split our mortgage into paying it twice a month. So I paid a little bit more, but I paid it twice a month. So we started balancing out when the money came in. So it balanced out with when the money was needed to go out. And what we wanted to do, because then the FICO score came into play, right? And we wanted to build up our FICO score. So I said, all right, what if we round it up? Credit card payment, I just rounded it up to the next dollar. I like even amounts. So I just didn't like all the pennies. So I just rounded it up and I said, now we're going to pay that a little bit early. We're going to pay it a week early. That's just going to be our discipline. The next thing I said, well, we got a car payment. Well, why don't we round that up? We'll pay it off a little bit earlier and we'll pay it just about a few days earlier than we normally would. And what we started to see was this trend that our FICO score after a few months and a few cycles of that was going up because we weren't paying the minimum anymore. We were paying more than the minimum. The next thing we did when splitting that mortgage, we were paying that faster, right? We were paying it sooner than we anticipated to the point where we could pay that mortgage off about 3 years earlier than we anticipated. So these are all the things that we're doing. Now, everybody comes to me and they say, now, wait a minute, those are all fine. That's great. But we're living in times that are unprecedented. I've actually had families come up to me and say their food costs have gone up by close to 40%. So I'm going to use some general terms because I don't want to be brand specific, but I think people will understand it. And Nate, I have a clock on the wall, but you are also my timekeeper tonight. So I can talk for hours, everybody. So we could be here till 9 o'clock at night and everybody be like, is he done yet? When we looked at just the budget right now, okay, food costs, anywhere between 30 and 40%. Gas, if you just look at it from a $4, it was $3, we're at a 25% increase in gas costs. So one of the things that we started looking at is, okay, how do we pay for things? We got this company, they actually have this program where if I buy gift cards, I get 2 times the points, or sometimes I get 4 times the points. Now, for us and our family, we said, well, we've got a vacation coming up this year, and I could buy gift cards towards paying that vacation off. And if I buy those gift cards, when it's 4X and I buy a $500 gift card, I'm getting a 2,000 points. That's $2 off per gallon. I can use it at $1 at a time. But then I started doing the numbers, right? So I started writing it down. I said, so if I do that twice a month, first of all, I'll have paid for my vacation by the time I get to go on vacation. That's a good thing. I'm not putting it on a credit card. Number 2, I will have been able to save us somewhere between $450 and $600 in gas costs over the next 4 months. So that's what we started doing. So right now, I'm paying $3 for a gallon of gas. And the other day, I actually paid $2.68 for a gallon of gas because I got $1 off per gallon. I could fill up both cars, which is the max, for that particular company, which will not be named, but we like them a lot and they're everywhere. But you see what I'm talking about. That's one way to leverage reduction in costs for those families that travel a lot. You have to drive the kids around everywhere. They might fill up twice a month. My wife and I fill up twice a month. She fills up once a month. Her commute's a lot shorter than mine. So that was the first thing. But then I started thinking about it this way. We had a baby shower coming up, and she wanted to get a gift from Bed Bath & Beyond. We decided we wanted to spend, it was just a little over $50. So I went and got a $50 gift card for that particular I did say it, Bed Bath & Beyond, because, it's just one of those where you go get, bridal shower gifts and baby gifts and all that. But I got 4 times the points. So now I had another 20 cents, 30, 40 cents off, right? So I had 40 cents off. All this to say that we can leverage some of these programs to our advantage. The next thing we did, which was even more practical. So now I had the gas. I had the kind of gas. I said, okay, I think I can reduce that cost back down to a normal level. I might even do a little bit better, if gas prices stay down. We don't know whether they'll go up or down, right? It was food. Now, in this country, there's a staggering statistic that I had heard that the average family will throw away anywhere between 26 or 32% of the food they bring into the house just from waste, right? From not consuming that food, or it expires. We put it in the pantry, or we put it in the deep, dark recesses of the refrigerator, and there it sits until something smells bad when you open the door. And then everybody says, we got to clean the refrigerator out. And all that luncheon meat that wasn't used gets tossed out. Well, those are real dollars. So in practical terms, what my wife and I did was we said, okay, let's go ahead and set a menu. So on Sunday, we set a menu for the week. This is what we're going to eat. And then she sends me shopping. Now, the part of that I find very interesting is she said to me one day, she said, I shop for the first 30 years. You get to shop for the next 30 years. So she just stopped shopping and she sent me to the grocery store. We learned a couple things. Never send Stuart to the grocery store hungry. You don't know what's going to come back into the house. There may be no food. It may be candy and snacks and, all kinds of stuff. So we learned, don't do that. But the second thing we did learn was that when we had a menu and I went and bought what we needed for the week, and we had a set menu planned, a couple things happened. Number one, less waste. Very, very little waste. If we make a little, my wife likes to cook for 8, even though there's 2. So we'll have leftovers and we put some in the freezer and then we eat the rest, and it's great, right? But less waste. But the other thing was, I wasn't going to the grocery store every other day. So less fuel costs by going to the grocery. And the most important thing, and after now we're in our 4th month of doing this, we noticed that we had reduced our food costs on average 32%, which I thought was like, whoa, wait a minute, that's a game changer. So if my food cost, because of price pressures and supply chain issues, had gone up and I just dropped it, I'm ahead of the game. So we're thinking ahead. Now we started thinking about, okay, these consumables that we have, like, I hate to say the word toilet paper, but we use a specific kind of toilet paper. And guess what? Supply chain issue. Can't find it, but I could find it on Amazon. So I did a price comparison and I found out that it's actually cheaper on Amazon. And I buy it once for a month, and then it comes. So then I doubled up and I did some paper products, other paper products that we use. I said, there you go. I only have to buy it once. Now, in real terms for families, we've recommended, in many times, my wife and I, that is, to maybe look at a Sam's Club or a Costco. These are, you're buying in bulk, but if you manage it for dry goods, let's say cereal, rice, those things that aren't going to go to waste so quickly, you can leverage the cost over time by buying it and just setting that menu like, okay, we've got 700 pounds of rice. We've got to use that 700 pounds of rice before we use anything else. Remember, I'm a comedian looking for an audience, and thank you for playing, everybody. I appreciate it. I'm getting smiles and chuckles in the audience, so I appreciate that. This is fun. I want to share that with people because a lot of people go, ooh, it actually has become a game with us. We call it, how low can you go? And what we have found is that you can go pretty low and you can enjoy it. And we get to share a lot of knowledge together because we're looking for things. She will clip coupons for me and I put them in my pocket. And when I come back home, I still have the coupons in my pocket, at least the first time I go. The second time I use the coupons, but that's what happens. So in practical terms, take charge of your spending. We ask each other a very simple question these days. Do we need it or do we want it? Regrettably, from the time we're very little in our culture, in our society, we are trained to be good consumers and good spenders, not good savers. And every audience that I have talked to in the last 4 years has confirmed that. I see lots of nods going on. We are conditioned to the marketing that takes place. So we have to change our behaviors around finances by saying, do I need it or do I want it? If it's a want for us, we now say, okay, we're going to save for that. And once we save for it, then we're going to go out and buy it. We're not going to put it on a credit card. And I missed a great opportunity. It's a shameless plug. But we just switched when it says to take charge of your spending and cover your necessities. My wife and I used to have a debit card. That's how we did it. We pay cash. After 2010, and we got everything taken care of, and we eradicated our unsecured debt, which we did. It took 7 years, but we eradicated a huge amount of debt. And it was fun doing it. And I am very proud to say, yeah, we're Dave Ramsey babies, because back then that's what we were doing. And where Dave Ramsey left off, my key at work, Employee Financial Wellness Program, stepped up and has taught us so much more. Now we're going into whole different realms of how do I save and spend wisely? How do I save and invest wisely? How do I manage debt? Well, when it came to spending, I said, no, wait a minute. We have cash in the bank. We go out, we buy what we need. Great. But that's it. Where's the benefit to us? Well, what if we flip that? What if we were disciplined enough so that when we buy groceries, pay bills, buy gas, we're using our credit card? Now, everybody freaks out. They go, what? You're using your credit card? It only works if at the end of the month, you pay for the credit card. So if I spent $1,000, I'm paying $1,000. Now, the really cool thing is my credit card gives me a percentage back. Is this a shameless plug if I say what it is? Let's put it this way. Banks, all banks have this program for the most part, somewhere around 1.5%. Some banks are 2%. Some banks, I've seen some banks that are paying for travel 5%. So if you buy travel through their program, you can get 5% cash back. Now, if you're going somewhere, that's a good deal. If you're not going anywhere, not such a good deal. But if you can discipline yourself to buying and paying for your bills with your credit card and pay that credit card off at the end of the month, a couple things are going to happen. Number one, your FICO score is going to go up. Number two, you're going to get cash back, which you can then use for other things. My wife and I look at it this way. We do this for a year. We may have enough cash benefits saved up that it's going to pay for our food when we're on vacation. So we paid for our vacation and we got the gas, discount. And now we've paid for all of our bills and stuff. And we've gotten the cash back. We're money ahead. This is working out quite well. So deciding where you want your money to go. I know and I'm not picking on Nate, he's just younger. He's like my kids. He's younger, okay? I came from the school of when I was first introduced to cable. This is the greatest thing since Swiss cheese, right? This is great. I don't have to go up and turn the antenna around. And most of Nate's going, what's an antenna? It was this cable thing and it came in and we got a clear channel. It was fantastic. And I want to share something with you. When the cable guy came in and he put the cable on our television set for the first time when my wife and I had our first home, he said, this is the greatest thing. This was in the early 80s, by the way. And he said, this is great because this is only going to go nothing but down in costs because more people are going to use it. And I went, great. And I saw it go nothing but up. And I went, what? What happened? I don't need 762 channels. I just need a clear picture. So funny thing happened. My kids grew up. They used our cable, fine. They loved it. Then they left. What do? They cut the cable. They don't have cable. They've got this and that and Apple. I'm going to say it. Apple TV, Hulu, Netflix, you name it. They got it, right? But I noticed something. They actually were paying a bit less. The only thing they actually pay for is their internet speed. That's important. Something about gaming comes into play there, but I don't know. Anyway, that's the most important thing. So if we have to think about where our money goes and what's important to us. So when we started looking at it, we said, well, I'll call them up. So I called up our provider, not going to name who it was. And I said, can I talk to your customer retention department, please? And I had a really heartfelt conversation with them. We placed a value on the internet connectivity and what we needed. And we don't game, so we just need it so my wife can get on her iPad and I can get on mine. There's another brand thing, but anyway, I like my iPad. And I can do things on there and that's great. And I can get on my computer and I can work at home and it's all great. But I really don't need your cable service. So you're going to have to be really good. Well, guess what? They didn't want to lose me. So they dropped it by half. So I'm telling you, that's impressive. So I said, okay, for that, I'll stay with you for at least the next 6 months. Then we're going to have another conversation. Well, the next thing I started thinking about was, wait a minute. So I get my internet from them and I get the cable. And I'm not ready to cut the cable, but the kids then gave me Hulu and Netflix and Disney for Christmas. So I was ahead. I was way ahead. We were like really happy about that because I really don't like commercials. But anyway. And then we said, okay, well, what about this cell phone thing? What about this cell phone thing? Is it really worth all that money? So I had the conversation. Could I have customer retention, please? Really like the service, been with you a long time, but I really don't like you keep raising this thing. No, I set a limit. This is how much I'm willing to pay. You decide how much you're willing to pay. If you want to know how much you're willing to pay, give me a call. I'll let you know how much I'm paying. What I found was, and I'm not going to say what mine is because I'm the primary, But my wife's is only $25 a month for unlimited data and calling. That works for us. But then the funny thing is our son said, hey, I'll weigh in on that because I'm paying a lot more. So if I come on your plan, I'm paying $25 and I'll just pay you $25. And I went, no, you're going to pay me $40 a month. Now, there's got to be a benefit to us here. So, you're still saving half of what you'd be paying if you were on your own. And he saw the wisdom in this. And so now he pays me $40 a month and I'm making $15 on the deal and it's all good. So anyway, you guys play along really well. I appreciate that. But this is what we have to do. We have to start thinking differently. When was the last time any of us had that lovely conversation with our insurance company? For some people, it's been 10 years, 15 years. I never had a conversation. Every year I sit down with my insurance agent. He starts sweating profusely and I say, I love you, but, I'm a safe driver. I haven't had an accident. My wife's never had an accident. We don't get speeding tickets. We're not a great risk. Let's get that cost under control. And we made sure we bundled everything. So our homeowners was on there and our cars are on there. And it just got a whole lot easier. And we saved, on average, between 8 and 1 year, we saved, I think it was something like 26%. I mean, it really dropped. I think it's because I turned a certain age and they said, yeah, he's just not going to go out that much. But anyway, every time we think about this, there are certain times when we are 18 to 21, we're a higher risk. When we're 21 to 25, we're an even greater risk. I mean, no, we're not. But, as we get a little bit older, a little bit wiser, we become less of a risk. We should have that conversation. I'm going to have somebody come up because I'm saving more money, managing your debt. Well, we'll get into managing debt. So we're just going to talk about saving more money. So handling, for unplanned expenses. If I ask the audience out there in the ether, how many people could put their hands on $1,000 cash today for an emergency without putting it on a credit card or borrowing it? How many would that be? What we've seen is study after study after study has said less than 76% of Americans could put their hands on $1,000 in a cash emergency. That is not a good situation. We encourage people to have at least $1,000. I'm going to use his name because I think he's one of the most forward-thinking financial wellness advocates out there, and that's Clark Howard. And I listen to him and I advocate what he says. His goal for this year was he wanted everybody to have $2,022 by the end of the year saved up for emergencies. And I'm going to give you guys a perfect example of why having that $1,000 is important. My wife, we were up to about $1,600 in reserve cash, right? Awesome. And right in the middle of COVID, I went to the dryer because she made me start drying my own clothes. No, I'm just kidding. I went to the dryer and I pushed the button and it went dunk. I went, that's not a good sound. That's a sound that's not drying. So I reset it and I turned the power off and I went up and I turned the power back on and I pushed that button, dunk, nothing. I went to my folder and I looked in it. Yeah, it's 9 years old. It died. Built-in obsolescence, right? New dryer, died 9 years later. So we went to a place and we said, okay, that's the dryer we want. And he said, how do you want to finance that? I said, do you take cash? And he kind of got this, yeah, we take cash because they want you to finance it, right? They make a commission on that. But if you pay cash for it, you're money ahead, right? So we paid cash for it. And I think it was $685 and put it onto the truck because I now have a truck. I'm so happy. So I got a truck and we took it home and we installed it and it works great. And I'm very happy. Now I've got the old one sitting in the driveway. And my wife, love her. She sits there and she goes, we should recycle. I said, yes, I can recycle it. I'll take it down to the metal guys. They'll give me $20 for it. I'm going to give you more than $20. So I put it on top of the truck and I shove it back. In that nanosecond that it's sliding towards the back, because I'm going to be safe and I'm going to put that strap on it to make sure it doesn't move around, In my mind, I'm going, so the back of my truck, there's the bed and then there's a gap and then there's the window, but the dryer's like this and there's the top of it. And that's about the time that the back window of my truck exploded. I stood there, and once my wife stopped laughing at me, I went, oh, well, there's a lesson learned. Okay. So we called up the insurance company, said, yeah, stupid people do stupid things. Oh, Stuart, yes, you did that. Right. Okay. Well, we're going to fix this for you. But you know what? That window cost you just over $1,000. The good news is you have a $250 deductible. So I went, great. I can pay the $250 deductible cash. So the dryer didn't cost $600 or $700 with tax. It cost $950. The lesson here is never shove appliances to the back of your truck unless you know exactly where that overhang ends. But more importantly, we had cash in reserve. We were able to pay for it without financing it. We didn't have to pay extra interest. And my wife and I together, but she made me put more money in, we rebuilt our cash reserves. But it made me think, what if I had to replace a water heater? Water heaters used to cost us about $450, $550. If you wanted it installed, a couple $100. A friend of mine had a water heater replaced. It was $750 to buy it. And if the fact that he did know how to install it saved him $500. So you need to start thinking, we all need to start thinking, what if the microwave goes out? How much would it cost for us to replace it? A dishwasher. Those are the least expensive, by the way, of our appliances. A washer and a dryer, very expensive. And a refrigerator can go from anywhere from $1,300 on up to $7,000, which just blows my mind. I said, what is it doing? Preparing the food and sending it out through a slot? I mean, that's a very expensive refrigerator for ice, Okay. The important thing is we need to know how much things cost today, not what they cost our parents, not what they cost us 10 years ago. What does it cost today? More importantly, what's it going to cost us tomorrow when we start thinking about supply chain issues and how much is it going to cost? Has anybody priced a roof lately? The last time we put a roof, we have a relatively moderate one-story house. It was about $4,000 all in. My friend, who has exactly the same footprint of house, one story, had to have his roof replaced this year, $9,760. And he said that was low. So we need to understand that costs of certain things have gone up. I want to share one other thing about being prepared. Nate said it, I want to save money for a home. That's one of the biggest issues, especially in the Columbus market, because there are such great pressures. There aren't enough homes for sale. We're not building homes fast enough. It's the Building Association of America said that it's going to take approximately, all things being equal and supply chain issues notwithstanding, it's going to take us approximately 36 months to try, because we didn't build houses for almost 2 years, very few number of houses. So it's going to take us another 3 years to try to catch up with the demand. And that's assuming that people will put their home on the market. So what's going up in its place? Apartments. But here's the reality of it. Apartment costs this year, I think, went up between $125 to I've heard as much as $250, $300 per month increase in rent. So with that, what I would like to do is I would like to have Nate come up and we talk about how to build, savings to reach your financial goals. Can you share just a little bit about what you know, Nate, about the mortgage and refinancing? Just a little blurb about that would be fantastic.
Yeah, absolutely. So mortgage rates and everything are relatively still low. In regards to the market, we do expect them to kind of start to climb back as we get further and further away from COVID, but still a great time. I'll do a shameless plug, like you said earlier. Key offers a wide variety of products. We have different things to help people that don't have, perfect credit or great credit and are looking to build that credit up to get that first home. There's plenty of programs out there that Key offers to help those people get that first home and get into those communities. Another great thing is just, looking at a refi. Maybe you have some of those credit card debts or other things. He
said the magic word. Now I'm going to stop him right there because he said the magic word, refi. Now, this is something that people get a little twitchy about. Let's say you've got some equity in your home. Equity says, oh, I could refi and I could borrow against it. But this goes right back to our topic tonight, managing finances in a crisis. Okay, Stuart, I've got managed debt of $24,000 of unsecured debt out there that I'd like to get rid of. Today, if you have a credit card, you're probably paying what, Nate? 16 plus percent? 23% interest. If you were to refi your home and you had the discipline and you had somebody like us who was going to work with you, and you could refi that home and say, look, I'm going to get rid of that $24,000. I'm going to refi my home because my value of my home has gone up, right? So that's good. And I'm going to get rid of that. What we need to think about is when we do a refinance, we can get rid of that unsecured debt that's costing us so much money. We can put it onto our mortgage, and we're still talking probably around right now without, again, it depends on your credit score. It depends on a lot of factors, but we've seen 4%, 4.25%.
Yep.
That's 20 points lower than your average credit card. So if people are sitting on debt, now is the time to reduce that debt and lock it in at a much lower rate. And the reason I say that is we've been told the Fed will raise the prime rate 4, maybe 5, maybe even 6 times within the next year. If even that, it might be even less than that. Right. So we have to think about that. How do I leverage what I have now to manage my finances during this crisis so that I am prepared for the what if? For my wife and I, for us, it was a home equity line of credit. Can you explain just a home equity line of credit for those who may not know what that looks like?
Absolutely. So a home equity line of credit is basically just taking some of that equity. So let's say you owe $60,000 on the house and the house is worth $100,000. So we're taking that difference to a certain percentage and taking that equity out to pay down some of the other, what I like to call is, bad debts or high interest debt. We want to eliminate those as fast as possible, make it one easy, simple payment for you guys, but also, that low interest rate can save you substantial amounts of money over a long period of time as well. Good.
I appreciate that very much. So how much should I have in my savings? We say a minimum of $2,000 cash, ready cash, so that you have it for emergencies. That's the first hurdle. The second hurdle would be whatever you use for a monthly budget, just start working towards, okay, I want to have that next hurdle. What I tell people is never boil the ocean. Little things add up over a period of time. It took us approximately 10 years to do it, but we would be fine. If one of us lost a primary source of income, we could pay our bills for a good 6, 8, 10, even 12 months. And yes, it would be difficult. It should be difficult, but we could survive. And that's the most important thing. So managing your debt, we talked about getting rid of bad debt, right? That's stuff that's on credit card. We highly recommend when we talk about the federal government raising interest rates, the corresponding interest rate hike for mortgages, for credit cards, for any kind of unsecured debt is going to start to get very uncomfortable. So the most important thing that we can do for you is actually do a financial wellness review. And that's just something that we do. I think many financial institutions will do it, but we take it one step further. We will take your entire financial life and we'll consolidate into a digital financial wellness review and actually give you a roadmap to this is how you do it. This is what we're going to take care of first, and the next thing, and the next thing, and the next thing. I'll just call it the snowball. You've heard that before in many, many programs. But when you take control of your debt, all I can tell you is that when we took control of our debt, when we eradicated that debt, our lives changed dramatically. health-wise, mental health, physical health, happiness quotient went way up. We see the end of that road. And or as I like to say, the light at the end of the tunnel is not the train coming the other way. So, and what point should I consolidate my debt? Well, we just talked about that. That's up to you. That's an individual choice. But it really does start with having these conversations, these deeper conversations. Now, the one thing that we wanted to touch on is protecting yourself against fraud and identity theft. And there's really just fundamental things that we should be doing, every single one of us. And we're never really told about this. I don't know about any of you, but I never really had a financial literacy class going through school. All the way even into college, I didn't have a financial literacy class. I had to make the mistakes myself, learn from them, and then bring that knowledge now here. So I prefer that you not make the same mistakes that I made. I prefer that you not fall down. I prefer that we share this knowledge freely with you and that you make educated, well-informed decisions. Check your bank accounts frequently. We cannot share, I think, strongly enough that there are a lot of bad actors out there, and they would like to separate us from our hard-earned money. The things we can do are very simple. Make sure that we have good, strong, well, if we're using the internet, if we're using banking, if we're using anything that's online, make sure we have strong password protection. Two-party authentication is never a bad thing. Be careful shopping online. Use a trusted, reputable websites only, which means when you look for something and it says ad on the front of it, that's not the one you want to click on. They're trying to sell you something else. You need to find that secure. HTTPS is a secure website. Also, one thing my wife and I, we use a separate, very low balance card for online purchases. That way, if for some reason there was a, what do they call it? When they get it, when a website gets attacked, a breach. When there's a breach and data is extracted, even if the bad actors had our data, we're relatively well protected, and they're not going to be able to charge, $10,000. And believe me, we hear these stories all the time. People will come and say, "Oh my gosh, my account was breached. $10,000 is missing, or $8,000 is missing." It's not uncommon in today's reality, but we can protect ourselves. So we talked about protecting your passwords and your usernames. Don't leave them lying around. Yes, I write mine down in a little book, but I put it in a little safe place. So because I don't remember it all the time, and I change it, by the way, I want you all to know this, we change our passwords approximately every 6 months. It's a personal decision. Be careful clicking links, right? Instead, type websites directly into browsers. So I just said, if you're looking for something in a browser, be sure you know where you're going. When it says ad in front of it, that's an indication that it's not the link you're looking for. It's somebody else who's using their information to extract information from you. Protecting yourself from fraud and identity theft. The simplest, most powerful thing that we can do is we can go to the 3 reporting agencies, get our report for free, get our credit report for free once a year. You can pull it off. You can print it out. You can come to the library. They'll help you. They'll show you how to do it. I love libraries. They're fantastic places. And you can also look at your credit score and know the true credit score. That only comes from those facilities, not from a third-party provider who will say, "Hey, we want to raise your score by 30 points. Let us show you how. Just pay us X dollars." No, that's not what this is about. You have a credit score. You have a credit report. You can get it once a year. As soon as you have your credit report and your credit score, lock your credit. If you lock your credit, your Social Security number, no one can get credit on your name and your Social Security number. The big question I get all the time is, doesn't that affect our FICO score? No, not at all. All it does is stop people, bad actors, from getting your information and stealing your identity and trying to create bills on your good name, your good credit. So the most important thing is, once a year, Get your credit report so you can check it for errors, because they do make a lot of errors, and make sure you know what your true FICO score is, and then lock your Social Security number so no one can borrow against your name and your Social Security number. We have a question in the audience. Yes. And thank you. We have a lady in the audience who said that she's never heard that before. How do you lock it? I'm going to say I told you about that Clark Howard guy. He has step-by-steps on his website, step-by-step instructions. But more importantly, you can call Nate and he will give you step-by-step instructions on how to do that. We will do that freely. We think it's important to provide this financial literacy to our community and the consumers here in Columbus, because it's that important. If everybody did that, I don't know what the number would be, but we could eradicate potentially 70, 80% of the fraud that's taking place today. If they don't have access to your credit, they don't have access to your Social Security number, they can't open accounts in your name, right? They can't steal your identity. And even if they did, they couldn't get at your credit score. Is that correct, Nate?
Yeah, I just want to add something to that real quick here.
Well, your mic works still.
Right.
Go ahead.
Just another thing to add into that is the loved ones that have passed. That's been a huge scam ever since COVID.
Yes.
Is a past loved one, making sure that you have their Social Security numbers and calling those credit bureaus to putting holds on those individuals that have passed credit, because that debt can come by. It can come back at us. So,
it can.
Just wanted to add that in.
That is an absolute point. If COVID taught us anything, we lost a lot of loved ones. And when that happens, people will take advantage of it. We need to make sure that we're securing their assets, that we're securing our assets. So what should I do if I'm having financial difficulties? Everybody has stress out there. The one thing that we did, and the one thing that I talk about every day that I work, is talking about financial wellness. And I always tell people, it just starts with a simple conversation. When we know where we are, we can attack any problem. When we know the realities of what's in front of us, we can move forward. So I really genuinely tell this to everybody. Sit down with a financial advisor. It could be the financial institution you use. If they don't have a program like this, we do. We will sit down. You don't have to be a customer of ours. We want to become trusted financial advisors. The way we do that is we sit with you, we talk about your finances, we show you what the roadmap looks like, and then guide you through that process. There are so many resources out there. When I look at all the resources, and this will be online, and we will have it available, I think, through the library, that you can click on these. These are live links that you can go on to. Look at financial assistance during the coronavirus. The reason I leave that up there is we don't know what we're done. We don't know if we're done yet, right? So relief checks may be coming, but the scammers are already here. How to handle a credit card bills during an emergency. There's so many things. We couldn't do it all in 1 hour. We couldn't do all this in 1 hour. We want to inspire a conversation. We want to inspire people to take action, to protect themselves, to help them get through this time, to prepare for what comes next. Could be good, could be bad. Time will tell. These are resources right here in the state of Ohio. Mike DeWine has done a great job of giving us lots of access to a lot of links and a lot of information that supports us. Economic resources for individuals and families that are in crisis. Financial assistance programs in the state of Ohio. COVID-19, a financial resource guide. We just wanted to touch on tonight all of the things that are available to us through our community, through our local government, through the state, and even federal resources. Many, many people are here. Now, you see how my name is in dark? It's Stuart Bale, Yes, there's my information. Yes, you can call me. Yes, I will respond. But the real heroes are the two people that sit at our Bexley branch. So in your community, if you're here in Bexley, and the guy that's been talking with me and sharing this with me, his name is Nathaniel. He goes by Nate. So when you go into the branch, say, "Hi, Nate," or you call him, There, you can call him, and there's his email address. As we said, and I'm going to make sure I'm mindful of the fact that that lady's going to come on the phone or on the speaker in about 15 seconds and tell me that the library is now closed. But what we really want to say to everyone out there who heard this message tonight is that we are all in this together. We are not alone. That the vast majority of our neighbors, as we look at them, have financial stress in their lives. It's the people that take control of their lives. It's those of us who are willing to talk about our financial stresses. When my wife and I talked about them, we found resources. We found a way to do that. And we are in such a different place that it's sometimes even hard to express. So our fervent hope is that we do inspire people to give us a call, have a conversation. Let us show you the difference between being prepared and managing finances in a crisis and through a crisis. And when we're through this, you're going to be in such a better place. You won't even recognize the reality that you're in. Again, I want to thank Bexley Library. I want to thank Whitney and Sue. And most importantly, I want to thank Nate for being here tonight to support me, because nobody wants to hear me for 60 minutes straight. I want to thank our audience that was out here tonight. Thank you for being here. And thank all of you for joining us on the internet. And we hope that we'll be invited back and we can do even more programs. There's so many more to talk about. All right. Thank you all. Have a wonderful rest of your week.